and welcome to the channel. Today we are diving into the home buying process with a special guest. So if you have questions about buying a home and the loan process, you are in the right place today. I am thrilled to introduce a very seasoned loan officer, Mrs. Khadijah Rivera. Thank you for being with us today. And she's going to share some very insightful and informative information today.
Thank you for having me. I'm so excited to be here and talk about the home buying process.
And full disclosure, I have to let you guys know that this is not our first meeting. We worked together several years ago. We're both educators, and that's how we met. We were teaching together. Yeah. So it's great to have you in this capacity.
Same here, same here.
So let's go ahead and dive right into the first question. So my first question is related to first-time home buyers, and I think this is something that they really wonder about. What are the key steps in obtaining pre-approval for a mortgage?
So one of the first steps that a first-time home buyer needs to do when seeking to get pre-approved for a mortgage is to first check their credit. They want to make sure that their score is as high as possible so they can get the best interest rate and condition and terms on a mortgage. So checking their credit report for any errors that might be on there, disputing any incorrect information, and making sure that their overall credit standing is favorable. So that's one of the first things that they need to do. Secondly, they will want to gather all of their financial documents. When you go to a lender or mortgage broker, they're going to ask you about your employment status and your income and so forth. So gathering any most recent check stubs, if you're self-employed, 1099s, your tax returns are important. Any type of rent of income, you want to be able to gather those documents. So if you own rental property, you want to have documents that show the rental income. Bank statements as well is something else that they'll ask you to have. So getting all of your financial documents together and ready to submit to a lender is important as well. And then of course applying with a lender. Choose a lender, choose a mortgage broker, and submit a pre-approval application. They're going to check your credit score, they're going to look over all of your financial documents, and then give you some sort of pre-approval amount so that you can go out and start the home shopping process.
Well, that's great information, and it really sounds like the pre-approval, these steps for that are very crucial for buyers. And this is great that we can segue into the next question because it does have to do with interest rate. So what factors determine your interest rate on a mortgage?
So there are a number of things that determine your interest rate on a mortgage. So one of the first things is your credit score, of course. One of the things that lenders look at is your credit rating, how well you pay your bills, and so forth. So your credit score is one of the first things that will determine your interest rate. The amount of down payment that you put down on a property will also determine your interest rate. The more down payment that you're able to put down on a property, the less of a risk that a lender will see you as. And so that in turn results in lower interest rates. So down payment plays a role in that. And then of course your loan types, whether you're getting an FHA loan or a VA loan, USDA loan, whether it's going to be a fixed mortgage or an adjustable rate mortgage, that also plays a role in interest rates. And then current market conditions, what's going on in the economy. The Federal Reserve plays a role in, the baseline of interest rates and so forth. So those are just some of the few things that would determine your interest rate when you get a mortgage.
So, understanding these factors are really important for buyers, it sounds like, and it will definitely help them plan as they're going through the process.
Definitely, it definitely will.
So moving into question 3, what are some common types, which I heard you mention them, but some common types of mortgage loans, and how do they differ?
Some of the common types of mortgage loans are FHA loans, conventional, VA loans, and USDA. Of course, there are some non-traditional types of loans out there, but these are the most common ones. I can give you a little bit of information on each one. So your FHA loans, Those require lower down payment, so usually that'll be about 3.5% down payment. And the credit score requirements are not as high as with other loans. So that's your FHA loans. Then your conventional loans, you have a bit more in terms of conditions, flexibility. So flexible terms, credit score requirements might be a bit higher than with your FHA loans. And then you have VA loans. There's no down payment required. And so our VA loans are for people who have served in the military, their military spouses, people who are retired veterans. So those loan products are for those people. You'll have lower interest rate with that loan product. And again, no down payment requirement. USDA loans is another type of loan. There's no down payment required. There is a restriction to rural areas where homes can be purchased using the USDA loan program.
So these are great options to consider depending on what your need is and what you qualify for.
Exactly.
Right? So on to the fourth question. What is PMI and when is it required?
So PMI stands for private mortgage insurance, and it is required when someone puts less than 20% down payment on a home. So what it does is it protects the lender in the case that the borrower were to default. It is a line item in that person's mortgage payment. So they'll have their principal payment, their interest rate, and then the mortgage insurance will be a part of that mortgage payment.
So, that is something definitely that buyers need to be aware of.
Definitely.
Going through this process. Now, our fifth and final question is something I think is really, really important. And it's a message I think that realtors especially want their clients to be aware of and that they may not even be thinking about. But the question is, what should buyers avoid, when they're going through the loan process, when they've applied and they're going through their approval process?
Great question. One of the things that they should avoid is taking on new debt. So when you're going through the pre-approval process or you're out shopping for a home, you want to make sure you're not taking on any new credit cards or deciding I'm going to go out and buy some furniture for the new property or finance a car. You want to make sure that you're keeping your financial standing as stable as when you applied for the mortgage. Don't change jobs. You want to make sure this isn't the time to change careers while you're searching for a home. So not changing jobs or not leaving your job entirely. And then lastly, just making sure you're keeping your financial situation the same as when you applied for that mortgage. When you're about to get to the closing table, one of the things that a lender does is they go back and they check that everything that you had submitted at the beginning of the process is the same. So you're still employed at the same place, you still have money in the bank for your down payment and your closing costs, you haven't taken on any new credit cards and so forth. So you want to keep your financial situation the same as when you first applied.
So it's probably not a good idea to borrow money to go to San Juan.
Exactly.
Wait until after closing day.
Exactly.
To get the new furniture or to go on the trip or to buy the new car, right?
Right, exactly.
Well, this has been fantastic advice and very insightful information. Thank you so much for sharing your expertise today.
Thank you so much for having me.
It has been great having you. And for you viewers out there, if you still have questions, please feel free to leave those in the comments, or you can contact me, Vicki Mitchell, a real estate agent, or Khadijah, loan officer. Our information should be on your screen, and that's how you can get in contact with us if you have any questions. Don't forget to like this video, subscribe to our channel, and make sure that you click that bell icon to stay up to date on our current content. Thank you so much for watching. I'm so glad you joined us today, and we look forward to seeing you the next time. Remember, it's Vicki Mitchell providing you real estate services with heart, integrity, honesty, and unwavering loyalty.